Good morning, everyone, and welcome to the PivotBoss pre-market video for Wednesday, January 24th, 2024. I'm Frank Ochoa, aka PivotBoss. Happy Hump Day, everyone. Here's a look at the daily time frame of the ES. Very, very bullish after hours and pre-market trade here ahead of the RTH Open. Netflix with earnings after the bell Tuesday, which led to strength very late in the day and a continuation here in overnight trading. We're seeing a push out of this two-day narrow range, and you continue to see how bullish the PIMA trigger zone is right now. Even if price were to drop down into 48.40 to 48.50, bulls would be looking to defend for a continuation up until proven otherwise. A failure here, and you drop and rotate back toward 4,700. Until then, this market remains quite bullish and continues to push to new all-time highs. Looking at the NQ. Similar price action out of the NQ. Very narrow, two-day narrow range here. Almost nothing like trading over the last couple of days. And again, earnings helping to trigger strength. This thing just drilling higher in after hours and pre-market trading. New highs here for this one. Very similar to the ES. A very bullish rising PIMA trigger zone. We're now through the 17.2 level, and any pullback even into that zone could still be bought for a continuation up on a swing basis. A failure at 17.2 and you open up a return back towards 16.10. So a very similar framework to the ES. Looking at crude oil, this one right now showing a double inside day right now. Double inside day at the moment. The previous session's range, a good intraday key range. You want to watch the edges for that range right there. Double inside day with an upward bias, failed new lows along the way. At some point here, we're looking for an upside break out of this narrow range. Again, we've talked about this narrow range now for many weeks. It's now 4 or 5 weeks old here, and the amount of energy in this range is tremendous. Again, the seasonal pattern for crude oil takes you higher into the first week of March here, but we haven't done anything here much to speak of to begin the year other than take the previous year's close bid. If you're going to take the previous year's close bid, then that means you may go and test the previous year's midpoint here, and that's 79.34. So that's likely the next key level up, but we got to get a breakout from this narrow range. A lot of compression right now for crude oil, and it definitely lacks the want to of a breakout at the moment. But pullbacks are to be defended here as this market builds for a breakout. Eventually, a transition out of this range will trigger the next multi-point move. 10, 12, 15 points of breakout movement over the next several weeks could be seen. Until then, more chop back and forth could be ahead. So be wary of the chop in the middle of the range. Take a look here at gold. Gold right now up about 0.5%. Very narrow multi-day range developing here. You can see this 4-day narrow range. That 4-day narrow range has quite a bit of juice in it here and could trigger the next move of about 60 points here for gold. You can see right there on a 4-day range basis, the 125% target would be about 58 points. So about a 60-point breakout move could be developing in this one. We've been seeing a downtrending market here to begin the year, but again, it's a downtrending market within the center portion of the larger key range. So it's not the best downtrending market at the moment, and we are now at the counter trend edge kind of a larger trend line here. So does this narrow range here lead to a surprise squeeze up ahead? Initially, we were looking for this thing to push down toward the bottom of the key range, perhaps tag the 2000 level here, but when you have a compression like this, a breakout in any direction could develop. So right now, watching the upper edge of the range, 2040, any rejection there, and we could see a continuation down within this trend. You break through 2040 and you could open up some upside here. About 60 points of a breakout move could be seen out of gold once this 4-day range sees expansion. Lastly, taking a look here at the YM. The YM still mostly range bound, not quite seeing the strength that the ES and the NQ is seeing right now. We're still at highs at the moment. but we're barely above the previous year's high. We're still in a significantly compressed market. Really, these last 3 days here widened the entire range of the last 4 to 5 weeks, and we're still kind of at that edge. So not quite seeing the type of strength overall, but still hanging at these highs, not really breaking trend. And again, even if we were to pull back here, it could still be a buying opportunity for a continuation up until proven otherwise. A failure at 36.9 will tend to open up more weakness here, but we just hadn't seen much in the way of weakness just yet. Any rejection up at these highs could swing us back down within the range, but again, bulls will be looking to defend until proven otherwise. All right, that is it for now. We'll see how this develops the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.